Happy Good Friday. Happy Easter, everybody. This is Rob. This is the Trading Room, and we are through the first quarter of the year that is in the books. So let's look forward. In this session, we're going to go through what happened last week. We're going to look at the markets, and then we always like to take a fresh look at everything. We're going to go through the markets. We're going to go through all of the sectors, score them from +3 to -3, and then we're going to go through some setups.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
All right, so last week, another up week, and this closed out the 5th positive month in a row. So the Dow and S&Ps closed at new all-time highs. The NASDAQ and the Russell did not. Now, the NASDAQ's going lower, and I'm going to show you a Russell chart today because I think that's really where some nice opportunity is on the upside. We got some fourth quarter final GDP data. So this was the final reading of GDP. If you don't know this, about 3 weeks after a quarter ends, so the quarter just ended, we should get our first, it's called initial GDP report, right around April 20th, about 3 weeks in. That's the initial one. That's like, okay, let's get a rushed number out there. And then they do more revisions, and they get the actual, which comes around May 20th. And then they get the final, which comes pretty much 3 months after the quarter, and that's what we just got. And economic growth was revised higher. University of Michigan consumer sentiment soars to July 2021 highs. So look, the economy is still in some really good shape. And if we take a look at some of the economic data, you can see things like durable goods orders were up nicely. Pending home sales and consumer sentiment up nicely. But we did get a little bit of weakness here in some of the regional manufacturing numbers. These looked fairly weak, but that's what the pattern has been lately. The big one was on Friday, and I actually waited to record this until we had this number. The core PCE price index came in as expected. I think the market is really going to like this number, and it looks like they might get the rate cut that the Fed has been talking about. Personally, I don't see any rate cuts this year, and that's what I've been saying all year. But if these numbers keep coming and trending down like this, there actually might be some rate cuts this year. Let's take a look at the market numbers last week. And you can see that we had a mild up week. We had the Dow up 0.88%. That was the biggest gainer here. The S&P basically slightly for the week. NASDAQ down 0.5%. Take a look at this Russell. And I've got a Russell chart to show you. I want to show you how nice this chart actually looks. And then oil and gold both really had big weeks, and oil is now up to the $83 a barrel. We've been liking the energy sector lately, and we think that continues to the upside in energy and materials. We take a look at this S&P chart. We talked about how this market is grinding higher. We based, broke out, based, broke out. We had this 4-day pullback, and then you can see here, everything is still very, very bullish. It is simply basing and breaking out, pulling back, and having bounces. Everything is still bullish. There's not one thing in this chart that anyone can say that is going to have a big pullback. This is just a bull market. Now, when we take a look at the NASDAQ, it's a little bit different story. You can see the NASDAQ has been, running below the 20-day moving average a few days during last month. And you can see this breakout was not a real substantial breakout like we saw in the S&P. We still are more in this base than out of it. That being said, this is not anything to be really worried about. I mean, look at this. This is just a pullback. The NASDAQ has run up a lot more than the rest of the market, so it's just a little tired. But when we come over here to something like the small caps, this is the IWM. Just take a look at how wonderful this ascending triangle looks. I mean, it is just a wonderful ascending triangle that has been forming since December of last year. And if you go back and see the resistance points on the Russell back in 2022 and 2021, it's looking like it's going to have a major breakout here. So small caps have definitely been lagging. There's no question about it. As I've talked about, we think this market is going to broaden. We think it's going to broaden. And that means that the things that haven't participated as much are probably going to start participating more. Let's talk about this week. I put this before the PCE price index came out, expected gap. The numbers came in as expected, which is good for the market. I think we do get a small gap on Monday, maybe something like 0.4 to 0.7%. I've been saying this for the last 3 weeks. I'm going to leave this middle one up here. Later stages of a bullish move. Don't be scared. Enjoy it while it lasts. These are easier markets to trade than something that's really choppy. Just give yourself enough time, give yourself enough bullishness, and this market has been paying you off for being that. And this is the first week of the month, so we have a ton of economic news. I mean, an absolute ton of economic news. Let's start up here. Monday, we have ISM. Big report on Monday, ISM. And then you can see here, we get stuff like the JOLTS job openings. People have been watching this. Remember, the Fed said they wanted to see this number come down. It was above 10 million. You can see it's now down into the 8 million. Wednesday, we get services PMI. We get some Fed speak here on Wednesday and Thursday. And then the first Friday of every month, we get our employment report. And these reports have been stronger than expected. No reason to think this is not going to be stronger than expected, but the market has cheered that. The market has liked that because, remember, as long as the inflation numbers are coming down, if the economy stays strong, that is really good for the stock market. So we're at a 3. We're at a +3. We've been at a +3 for a while. We backed off to a +2 on this Friday. That was the only time we haven't been at a +3 for a long time. That happened on a Friday. So we backed down to a +2. Everything looks really good. I've got a 0 on the week. I think it's probably going to be more of a +1, +2. But I wanted to put this out there because, as I said, this kind of market can be a little frustrating because we're going to see kind of price action we've seen over the last couple of weeks. And I'm going to go back to this S&P chart and just talk about, take a look at this. This has been bullish, but this has been choppy. I mean, take a look at the price action. Take a look at the price action. 2 days up, 3 ugly days. 1 day up, bunch of ugly days. 2 days up, 4 down days. This is the kind of price action you have to kind of expect going forward here. It's going to be choppy, but the end result is it's going to move higher. Swing trading is difficult in this environment. I mean, take a look at it. If you're trying to buy a stock and get out in 2 to 3 days, there was one period where that was a good idea. Everything else, you got chopped up. You got chopped out. So we definitely say give yourself enough time to be on the bullish side. Let the market work out for you. The markets are clearly bullish, so let's take a look at some of the sectors. Let's take a rundown of the performance last week. The utility sector was the strongest performer. We have really been liking the materials and energy sector. These have been our 2 favorite sectors over the last little bit, along with industrials. You can see industrials took a little break here, but energy materials continue to just chug higher. Technology was the negative sector, along with comm services. We're seeing the rest of the market broaden out. That's really what we're seeing here. Healthcare, we're going to take a look at healthcare. Will look good. And real estate had a nice little jump. The big question is, real estate was our weakest sector. Is this just a bear rally we can short into, or is this the start of something a little bit more substantial? Let's take a look at the charts and answer those questions. First up, we've got utilities. And take a look at this beautiful, beautiful breakout here. It's a +3. If we take a look at this base that is formed, we were below the 20, below the 50 for a while, and then the 1st of March, we came up, we based. That's a really solid breakout. And if the public believes that the Fed is going to give us a rate cut, then all of a sudden, interest rate stuff looks a lot better. So that is utilities, upgraded from a +2 to +3. We take a look at comm services. We really like this one. Very long base. It had a breakout, but look, it wasn't a breakout and run. It was a breakout and more consolidation, but you can see it's still at a much higher level. We're going to keep this one at a +3. Real estate. Real estate has been going from a 0 to a +1 to a -1 to a +1. We're staying here at a +1 just because, look, 3 days ago it was below all the moving average. Today it's above. It's just because it's trading at its moving averages. But we're going to maintain that at a +1. Over here to the healthcare sector. Healthcare has been basing for a while here. And the question is, are we knocking on the door? Are we ready to break out and run here on healthcare? I'm upgrading healthcare this week. We're going from a +2 to +3. I think this one looks pretty good. It's definitely on the top of my list for strong sectors. And again, not just strong sectors, but strengthening sectors. Things that are actually getting stronger as we speak. Next up is industrials. We've loved industrials for a long time. We still like them. They've been at a +3 for a while. They maintain a +3. As you can see, they are breaking out to new highs. So continue to stay strong in those. Financials look even better. As you can see, that candle on Friday was a better candle than what we saw in industrials. This stays at a +3 as well. Super strong in the financial sector. Next up is our consumer sector. This is one that also has been underperforming the market. After making a high back here, we came down and we spent a lot of time between moving averages. I mean, remember, we just looked at industrials and financials. They have spent 0 time below their 20, 50-day moving average. This one has. We had a nice little pop-up out of this area, but really no follow-through. It's still bullish, but it's just not as bullish. We're going to keep this one at a +1. Coming over here to tech. Tech has been basing, but as you can see here, it is coming back down below the 20-day moving average. We are sitting at a +1. I'm not saying it's bearish. I'm not saying to be short, to be net short in this sector. But if you are looking for where to go hunt for some shorts, I think these last two sectors, the consumer and the technology space, is the place to look for some weaker stuff. And then on to the stronger stuff. I mean, take a look at this chart. We are breaking out above these highs. This is the best looking chart here that we've seen so far. So materials +3, and then energy says, wait, I want to be the best looking chart out here. Beautiful, beautiful, just runs up, couple days base, breaks out. This thing has got a ton of momentum. We like this one as well, +3. So let's stack them all up. This is where we were last week. And let's see some of the movement here. We got upgrades from healthcare, utilities, and real estate. And we downgraded tech to a +1. So as you can see, we got either all +3s or +1s. Now, when we take a look at a sector outlook like this, we also need to start looking at like +3 pluses and +3 minuses. And what I mean by that is that we really have to decide where we want to go hunt. We really want to talk about the things that are currently strengthening. When we took a look at like comm services looked really good, but it wasn't breaking out. It wasn't running. It wasn't strengthening. It was just kind of hanging out. When we took a look at energy was actively breaking out. Materials were actively breaking out. Financials, industrials were good. They were just chugging higher, but they weren't doing it with a ton of new energy. Healthcare, we looked at that base. It looks like that wants to start to break out to new highs. I think you have to start looking at, okay, yes, we got a bunch of +3s, but where is the momentum going? And we like healthcare, energy, materials the best. Let's take that information and go out and find some possible trades in some of those sectors. Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply. The utility sector was a sector that was upgraded, so again, we have a sector that's showing some stronger movement over the last week. Let's take a look at a potential trade on Dominion Energy. Ticker symbol is D. And you can see we've got this resistance area here. We've got this building momentum here. We got this little pullback here that was bought aggressively. For me, I really like this one. It spent a lot of time here under this $49. Got some momentum looking to break out. So the question is, how do you play this one? Well, with the utilities, you pretty much have to play monthly options. There's not, I think there's one or two stocks that have weekly options. So we're looking at the April 19th, 47.50, 50 bull call spread. Now that is going to be probably a delta of 0.65, maybe even 0.7. So that is going to be a theta trade. That's going to be hey, we just need it to hold up in this area to be profitable. If you want to be a little bit more directional, you're going to have to go with that May 17th, April 19th, 45.50 diagonal call spread. And then you can look to roll that after those April 50 calls expired, if it's still around $50. If it's blown past that, just sell the whole thing and put the gain in your pocket and move on to the next one. Next up in healthcare, this is a sector we think is strengthening. Looking for something that is breaking out to the upside. We've got Edwards Life Sciences, and just take a look at this chart. This is just a beautiful looking chart. We had a run and a base. We had a breakout. Not a lot of energy behind it, and another base, but take a look at this base. I love rising bases. This is beautiful. It's just telling you that, hey, people are waiting to buy this. They're just waiting on weakness, waiting on weakness. At some point, they're going to say, oh, we can't wait anymore on weakness. Looks like this thing is breaking out. As you can see here, 95 is this resistance level. So we want to take advantage of that and take a look at a potential trade up to the 100. Now look, if you want to do the 100, I think you need to go out to the monthlies. It's going to give you roughly 3 weeks. If you want to be a little bit more short term, I think the 95, 97.50 bull call spread looks decent. That's just asking the trade to go right up to this point. In 2 weeks, I think that is a very, very reasonable place to look for a target here in 2 weeks. But if you want to go a little bit bigger, the 95, 100 looks good as well. Moving into the consumer sector, this is one of the sectors we flagged for being a little bit weaker. We're going to take a look at a sideways trade here in this sector, and here we have Hershey's. As you can see, Hershey's is just going nowhere. I mean, take a look at these moving averages, flat, going nowhere. We've got really 205 is this upper point that we tend to get to, and then down here to, let's call it 185. This is the range here, 185 to 205. The question is, okay, how do you play that? I think if you can be short-term, or if you want to be short-term, I like right where it is. The April 5th, that's giving you 5 days, 190, 195, 200. That's going to be right in this area. So your profit area is going to be basically probably 192.30 up to 197.70. So again, pretty tight window, but only 5 days. If you want to go a little bit bigger, then it is the monthly 185, 195, 205, and that's capturing that range. That's perfectly in this range. Your profit area is probably right in this area. I think that's a solid trade for a sideways in consumer. Moving on to tech. Tech was another area we saw was actually weakening. This is a trade we actually got just finished with in the trading collective. We put this trade on about 2 weeks ago to be bearish, and it worked out really well. We had the 197.50, 192.50 bear put spread. So this was almost a max gain, very close to a max gain. Look, it's okay. Trade worked out very well for us. With that being said, it's looking fantastic. Same thing here. We not only have a low base, but it is descending in strength. This is all during a time where the markets were moving higher. This one to me looks like it really wants to move lower. If we get any sort of sell-off in tech, I don't see any reason why this thing isn't down to like the 185 level fairly quickly. I'm not being that aggressive. I'm not being that aggressive on any shorts, so I'm looking at something like the 195, 190 bear put spread, which is basically looking to play it right here. As you can see, this is not a big range I'm looking for. I'm just saying, hey, I think it's going to be below 190 by the expiration period. And let's move into energy. This is a great looking sector. I still think there's a lot of upside potential in this sector. Here is PBF Energy. Look at this high base. Beautiful high base. And it is just waiting and waiting. It may not break out tomorrow. It may not break out Wednesday. I don't know when it's going to break out, but high bases tend to break out to the upside. So we just have to take a look at a potential trade. This one only has monthlies, which I really like because since it's basing, we don't know when it's going to break out. It's very hard when you do shorter term trades and they're still basing, because if you do anything that's aggressively bullish, you lose. Even though the stock continued to stay strong, it just didn't break out and run. I like this because you have to give it at least 3 weeks. You have to give it at least 3 weeks, and we're looking at the 55.60. The stock is right in the middle of these two. It's basically going to be a 50-50 1-to-1 risk-reward trade in the energy sector. I really like this one. If there's any trades you want to share with the rest of the Maverick Trading group, jump onto the forum, go to the website, log in, go to the forum. We always love to see traders sharing ideas and helping each other out. Let's wrap this up. Mature bull market, expect a slow grind higher. I haven't changed this for, I think this has been 2 or 3 weeks it's been on here. I'm probably going to leave it on here for the foreseeable future until this market finally does break. Yes, it will break sometime. Yes, there are some stocks that are in a bubble. I get that. But as a trader, your job is to make money. And the best way to make money is to be on the long side right now. Forget your ego, forget all the things you read, forget about what someone said on TV. The market is moving higher at the moment. It might be over, but guess what? You could have said that a month ago, 2 months ago. You were wrong every time. Enjoy the bullish market. Expect, though, the gains from here on out are probably going to be harder fought. That's why we like you to be a little further out in your time frames. Give yourself 2 to 3 weeks to get through that choppy, crappy price movement, to just have it drift up and have your trades be profitable. Being shorter term here, I think is going to be a more difficult play as a trader. If you're trying to do 2 to 3 day trades, I think it's going to be tough because it's going to be very choppy on a weekly basis. Everyone have a great weekend. Happy Easter. Happy Passover, everyone. Goodbye.